All right, so you've probably seen all the clickbaity videos that are like, buy and build a home for $0 down, USDA RD construction loans, construction to permanent loans. USDA will pay for your land and your house. That sounds awesome, right? Why don't more people jump on that? That sounds incredible. But with that, there's a lot of things that actually don't tell you. Now, I decided to go out of my way and actually email and talk to the USDA RD and construction loan department myself to try to figure out a little bit more of this. And with all the emails they sent me and all the conversations we had, I found out this program is actually a lot less simple than they kind of make you believe, and especially with all those YouTube videos and the people you see posting about all the time. In fact, depending on state, county, and local regulations, this can be a super time-consuming process and massively hard to qualify for. And oftentimes, it can even be impossible to complete. And while yes, this is a super cool program and it does work, but to be honest, if you get them to work, it could take literally years or be impossible to complete because of either their regulations, timeframes, or anything on the back end if it falls through. So I'm making this video not to deter you away from having these conversations and seeing if it works, but to give you all the upfront so you know before you start the process if it's even worth your time to try to look into. Because to be totally honest with you, there's a lot of other programs that will probably work better for you to get into if you're actually trying to get into a home. All right, so we're gonna get started with why this loan actually looks so good on paper. Now, the USDA's 502 Direct program is designed for low and very low income buyers who want to build a home in a rural area, right? So the biggest selling points are 0% down, it finances both the land and construction for nothing out of pocket, and it's government backed. So you can't use private lenders. It's just the USDA handling everything all the way through. But before you start picking out the floor plans and shopping for the land, let me tell you what USDA told me about using this loans and how it actually works. So we're going to break this down into sections because there are some serious issues with using these loans, but first we're going to jump into the first major roadblock. Now, one of the biggest reasons people don't use this loan is the waiting period. Now, I'm going to read you directly what they sent me, but the wait time they confirmed right now, and this is as of today's February 6th, 2025. I got these emails on the 2nd or the 3rd, excuse me. So on Monday, February 3rd. Right now, there are 460 plus applications already in the queue waiting for funding. And on top of that, they're still processing 200 plus of those applications of that 460 are from last year that have still not been funded. Now, that is pretty crazy if you think about the amount of applications and the amount of actual fundings that they're waiting on. Now, the thing to keep in mind with this, and if you feel like it's bad that there's that many applications still sitting there, this is not a first come, first serve program. So what a lot of people don't realize is that USDA doesn't process their applications in order they're received. They have a priority system. And depending on where you fall into the system, it could be a very long time, either waiting for your loan to process, getting final approval, or funding on the loan. Now, what they sent me was a priority 4 is self-help loans. Priority 5 is every other loan. So resale, new construction, takeout loans, whatever you're doing with the land. So most of the people I talk to that are looking at this loan are going to be priority 5. They're going to be people that are in the very back of the line. They're buying a home because they think it's going to be cheaper. They like the 0% down option. They're taking out the loan for the financing of the land, as well as the actual purchase of the home, as well as the construction loan. These are all priority 5. So these are the very last in their line. Now, in the emails to me, they confirmed what's called priority points. I'm going to read you. This is directly off USDA's website. So if you don't believe me, go look it up. But priority points, also referred to as discretionary points, are additional points added to an established scoring criterion that USDA Rural Development uses to help determine which projects qualify for funding. Awarding extra points, for example, priority points, raises a project score, which in turn improves the chances of a project being scored high enough to warrant a funding award. The flexibility related to these kind of points varies depending on the regulation language. So basically what they're saying in translation would be, even if you're next in line, you might get skipped because there are other applications that have priority points that push ahead of yours. So not only are you waiting, but you're also competing for the funding that may never get to you depending on where you sit in the line. And even if you somehow manage to wait this out, the bigger issue that USDA, and again, this is off what they told me, isn't sure if they'll have the fundings to approve these loans. They're not guaranteed funding. This is a government program that can run out. So Minus the major roadblocks, the biggest actual risk of doing this whole process is that USDA told me they're currently operating under a continuing resolutions, meaning they have limited funding and they do not even know what their budget will look like under the new administration. So just picture this. You've now been waiting 2, 3, 4 years for this loan process, only to find out the money isn't there when you need it. And that's why for most buyers, this loan option does not usually make sense. Now, from the actual emails they sent me, they literally said, on average, with no issues in the loan, these loans take anywhere from 1 to 3 years in order to actually go through and fund, and sometimes up to 4 or 5 if there's any sort of roadblocks or issues in the applications. So if you're anything like me and you like some certainty to what you're getting into, the USDA loan construction-wise may not be the best plan for you, because this is a waiting game with no guarantee of a payoff. So like any good lender, I'm here to tell you there's also good news. There are a lot of other options that most lenders can get you that will get you in a home for around the same amount down. Now, back up a little bit. A lot of people reach out to this loan, especially where I'm at in Sacramento area and California in general, because they feel like the housing is too expensive and they want to be able to buy the land and build out in the middle of nowhere and do it much cheaper. The reality is usually when you go through these construction loans, whether it's USDA or a different one, you're not really saving a lot of money. By the time you actually put in the plot of the land, you have to purchase the land outright. You have to now build the pad for the home to sit on and then actually have the home come in and built, whether you need manufactured or not. Oftentimes it's a lot more expensive than people think it is because they assume they're cutting the cost of purchasing a home. That's the number one reason when people reach out to me. They think that the USDA buy and build is a better option. And I'm here to tell you that I don't think that's true. And I'm going to give you some other options that you have so that you walk out of this YouTube video and this with a better understanding that you're not stuck. You can still buy a home. There are other options that can bring very little to nothing out of pocket, and that can be probably even more realistic depending on the budget you have. So first one is the USDA guaranteed loan. These are loans that we can do as lenders. They don't go direct through the state, they come through us. The USDA guaranteed loan is a 0% down payment loan that is hard to get. If you haven't seen my other YouTube video on it, go check it out. It is very hard to qualify for because of the debt to income ratios. But to clarify, the buy and build loans also have a very low debt to income ratio, as well as other qualifying factors like credit. So depending on which city, county, state you're in, it's going to differ. Now, with these USDA guaranteed loans that we can do as a lender, you're still a 0% down. They may or may not run out of funding. Usually they're not out of funding on these loans because technically the lenders themselves are the ones funding it, and then we sell it off after. They're easier to qualify for the direct loans, and there's no construction delays. You do have to buy an existing single family home. It does have to meet some certain requirements, but you can buy an existing home. That's all this is for. This is not for your farmland. This is not your agriculture loan. This is something that's built for you to be able to move into your first house for very little out of pocket. Now, the second one we have is construction loans. Now, this is a much more realistic way to build. Oftentimes what I see for construction loans is if you're set on building, the best thing you can do is purchase the land. If you own the land outright or can get it for cheap, now you actually have something you can build on. Now, these construction loans typically require anywhere from 5 to 10% down. Most of them I see are on 10%. The benefit is you can use land if you own it as the collateral. So you don't actually have to come in with a down payment if you have the land and you own it outright, or even if you own 50% of the land, depending on the land's value, you can use that as a down payment to basically cover the collateral and the down payment for you. Now, these are also much faster approvals. You do work directly with private lenders. You get to pick your own builder. You get to go through your own schematics. You get to do kind of everything on your own. This loan option is really, really good if you truly are stuck on the idea of buying and building. And if you want to build your own home, now keep in mind, a lot of companies that do construction loans like this don't do spec homes. They don't do custom homes. They do kind of, you have this from this builder buying at this, or you can do barn dominiums or options. You can do manufactured homes where you basically buy it. There are a lot of companies that sell those for a decent price. You can go check out the models in the manufactured home community, come bring it out, put it on a slab of land, take care of everything with it. Good options as well. Now, the third one you have, and one of my personal favorites, is the down payment assistance. Now, I'm going to talk specifically about California for this. There are a lot of down payment assistance options in other states as well. Now, the third option and my personal favorite is the down payment assistance programs. Now, I work a lot with California down payment assistance. There are plenty of other down payment assistance programs that you can use as well, that are national and that are available to everybody. But I'm going to talk specifically about the one that I use the most in California, Cal HFA. And we'll also talk a little bit about the Shinoa Fund. Now, the Cal HFA is available in all of California. It is an awesome program because it's a 1% simple interest rate that you take out both the first and the second mortgage. You do pay it back, but there's no monthly payment on it. Usually the rates are pretty similar, if not even lower than the current rates for the day if you were to just go shopping. Also works under a 640 credit score. They're awesome. If you're in California, that's the one that I would recommend here. Now, there are some specific, I know there's some in like the Bay Area that are really, really cool. They give you up to 30% down to help lower the mortgage payment. The Shinoa Fund is another one. I believe that's available nationwide. What that one can do is gives you up to 5% down, and it's actually forgivable. So depending on some of the requirements, there's a possibility that you could actually, if you make enough payments and pay it back over time, if you stay in the home long enough without refinancing, it'll actually pay itself off and you don't ever have to owe that 5% back. There's a lot of really cool down payment options, and these are here. Most of them are not government funded. Most of them are put on by individual companies, which is really cool because that means a lot of times they won't run out of funding. These are companies that have made money off this, that have figured out how to do this to where they can actually provide these values to you. Oftentimes there are some that do not work well that I don't recommend, that it doesn't make it worthwhile. But some of them, and a lot of them, if you talk to a lender about getting into the specifics, are really, really, really good loan options to help you get into the first home. Now, I wanted to bring this up. Obviously, we're talking USDA, something to think about if you're looking to buy and you've decided it's just too expensive, it's not worth it. The number one reason homeownership is worthwhile, it is one of the only investments you can get into for very little out of pocket, that you make the actual appreciation on the home. You're making interest on the home at the value of the entire thing. Now, obviously you have to pay back the loan, but there's no other investment. If you were to buy a stock and you paid $3,000 for it, you get the amount of that $3,000. That's what's building interest, right? So let's say your stock market's returning at a 5%. You put 5,000 in, you're getting 5% back. So you're not making a whole lot on that. A home you buy, even with a 0% down payment, it's still in your name. You're the one building the equity on it. That's the biggest thing to think about. So if you get into a home, let's say $15,000 or $10,000 or $5,000, you use a down payment assistance program and you only pay $3,000 out of pocket, but you bought a $400,000 home. That $400,000 home, you had a $3,000 initial entrance fee, basically, is what you have to think about it. You're building equity on the $400,000. So if that $400,000 appreciates at a 4%, that's a lot more money than your $3,000 appreciating at a 4 or 5 or 10 or 15%. It's the equity, you own the entire thing. That is why I recommend down payment assistance if they make sense for you. They are situational. Some do and some don't. It's really about having the right conversations and figuring out what's going to make sense for you. So my final thoughts on this whole thing is that if you're okay with waiting years and you really want to buy and build, absolutely. Reach out to me. I'll even help you get connected with the USDA RD department. I'll get you their emails so you can get it forward. You can get your application going, whatever you need to do. It's also linked down below. I'm not trying to gatekeep. I'm not telling you not to do that. I just want you to understand, most of the people that reach out to me thinking they can do this loan, I have yet to see anybody actually go through with it because of how hard it can be. And I don't want you to sit there wasting your time thinking it's going to be this perfect, cheap option to get you in something for free. That doesn't really exist. There's always going to be stipulations to it. So talk to a lender, figure out what's going to make the most sense. A USDA construction loan might be an option and it may be great, but there's a lot of alternatives and you won't know which ones you actually qualify for until you talk to a lender and figure out where your situation's at. Because there's a lot of people that qualify for down payment assistance. I heard a statistic the other day that out of everybody that buys a home as a first-time buyer, over 80% qualify for first-time buyer programs and only about 7% actually use them. So there's a lot of options out there for you if you're trying to buy a home, if it makes sense. And that's what I got for today. So if it makes sense, and if you don't know if it makes sense, go talk to a lender, go see what you can do, because you should absolutely look at home ownership sooner rather than later. Like any investment, the sooner you get in, the higher it's going to build, the more you're going to actually end up having the wealth off it in the future. So get in when you can, no matter what that barrier is at. Let's figure out what's going to make sense for you. Thanks again. I'm Jake, and I'll talk to you soon.